Proposition 41 is a bond act. Before we get into details, let's take a moment to cover bond basics. Governments sell bonds in order to finance capital projects. It's a little like the way a family will take out a mortgage. You're borrowing money, but you're using it for something that you expect will be important to you for a long time. California has sold a lot of bonds over the years, typically to pay for infrastructure projects such as roads, schools, parks, and prisons. Right now, the state's general fund pays about $5 billion a year in infrastructure bond repayments. That's between 5 and 6% of the general fund going to paying off debt. In general, the ratio of California's debt payments to the size of its economy is higher than average for a state, but isn't the highest. The bonds in Proposition 41 are intended to fund housing for veterans. California's had a bond program to help veterans buy houses for a long time. The state buys the houses, and the veterans pay off the bonds as they pay their mortgages. So those bonds don't need to be paid back out of the general fund. Those home loan funds are going unclaimed, though, as mortgage interest rates are currently very low, and veterans who can pay a mortgage have more options. Proposition 41 moves some bonds that have already been authorized out of the home loan program. It directs those bonds into funding affordable multifamily housing such as apartment complexes for rental to low-income veterans. Now, you're defined as having low income if you earn less than 80% of the average local family income. Priority would be given to projects that would house veterans who are homeless or at risk of being homeless. These bonds would be repaid out of the general fund. They wouldn't have the mortgage payments that the home loan bonds have for repayment, and they would increase the state debt payments by about $50 million a year, an increase of about 1% in the amount of debt service, or 0.1% in the debt service ratio.
The legislature put Proposition 41 on the ballot, and supporters include the American Legion, U.S. Vets, and Swords to Plowshares. Supporters say that this program will help tens of thousands of homeless veterans get a roof over their heads without raising taxes or adding new debt to California. In fact, it'll save taxpayer dollars by getting veterans off the street and into safe, affordable housing. Arguments against Proposition 41 were signed by attorney Gary Wesley. Opponents say that unlike the home loan programs, these bonds will need to be repaid by the taxpayers out of the general fund, and that any program which involves expenditures not given directly to the intended beneficiaries is subject to possible mismanagement and waste.